Why Western Canada is the next global investment hub. Everyone is looking at Silicon Valley for the next big tech play. But the smartest money? It's quietly moving further north. Welcome to the Kairos. Today, we are decoding a massive geopolitical shift. We're looking at why you should invest in Western Canada and how a rapidly changing world order is turning this region into the ultimate global investment hub. The global economic axis has shifted to the Asia-Pacific, and right at the crossroads of this boom sits Vancouver. The port of Vancouver is Canada's largest trade hub, and the third largest on the North American west coast. It's not just a city, it's a strategic bottleneck. Right now, Canada is facing a survival imperative. They need to reduce their massive 70% trade reliance on the United States, especially amid unpredictable tariff threats. The solution? Pivot hard to Asia. And Vancouver is the primary gateway to make that happen. But trade is only half the story. The real catalyst here is energy security. Look at the Middle East. It's increasingly volatile. From drone strikes to threats of blockading the Strait of Hormuz, which handles 30% of the world's crude oil, the global energy supply chain is under severe threat. In this climate of fear, nations are desperate for stability, and that's where Canada steps in. As the world's fourth largest oil producer, Canada is aggressively expanding its capacity to export oil and natural gas directly to a thirsty Asian market. Two massive projects are changing the game right now. First, the Trans Mountain Pipeline expansion. This just nearly tripled its transport capacity to 890,000 barrels a day. Instead of selling discounted oil to the US, Canada is now sending mid-sized tankers straight to the Pacific. Second, LNG Canada. This is a massive joint venture in British Columbia involving global giants like Shell, Mitsubishi and Kogas. They are locking in stable, rapid supplies of natural gas for the coming decades. This isn't just infrastructure, it is a fundamental rewiring of global energy flows. So, how do you position your portfolio for this macro trend? For international investors, US-listed Canadian ETFs are the most efficient route. Here are your top plays. EWC is the oldest and most liquid option. BBCA by JP Morgan offers high trading volume with a lower expense ratio of 0.19%. If you're a long-term holder, FLCA is the most cost-effective at just 0.09%. And if you want to target the pipelines directly, look at IGF, a global infrastructure ETF with solid Canadian exposure. A word of caution though, the Canadian market is heavily weighted towards financials and commodities. It's not a high-growth tech play. Treat it as a strategic hedge and an income generator in a resource-scarce world. If you want to stay ahead of the curve on global macroeconomics and geopolitical risks, hit that subscribe button. Timing and insight are everything. Thanks for watching the Kairos. See you in the next video.